This is a recast of the 2,700-word piece, Is World War III Looming? Experts debate the impact on gold and Bitcoin markets, from Kitco.com. Let's listen in.
The article opens with a quote attributed to Mark Twain. History doesn't repeat itself, but it often rhymes, and uses it to draw attention to the rising geopolitical tensions and deteriorating economic conditions worldwide. Comparisons are drawn to the circumstances that set the stage for the Great Depression and World War II about a century ago.
We see major conflicts across the globe and increasing discussions about the possibility of World War III. Many investors are concerned about maintaining their wealth amidst all this uncertainty, leading them to consider assets like gold and, to a lesser extent, Bitcoin as potential protective measures.
Martin Armstrong, an economic forecaster and founder of Armstrong Economics, highlights two major forces at work that could potentially lead to World War III. First are the Nukeans, who have waged endless wars since the 1960s. Armstrong also mentions Blinken threatening China over Taiwan despite China holding a significant portion of United States debt.
The second force is the growing chant for war with Russia from countries in Europe due to NATO, which Armstrong refers to as a neocon organization. Armstrong also discusses the increasing interest in central bank digital currencies, CBDCs, by governments, which is likely an attempt to eliminate physical money and make everything traceable.
Armstrong suggests that investing in tangible assets may be a wise move in light of the potential for World War III. He names precious metals, real estate, and shares with tangible assets as examples. He notes that tangible assets have traditionally survived the collapse of currencies.
He also warns that governments will impose capital controls during wars and might attempt to cancel paper currency, forcing everyone into CBDCs. In such circumstances, he believes physical gold and silver will be the only form of money to survive. However, he cautions that cryptocurrencies are dependent on the power grid and therefore vulnerable.
Armstrong also notes that all currencies are fiat and slams the notion of returning to a gold standard as unviable because it has always failed when fixed to a specific value. He warns that governments' relentless spending will result in the fall of Republican forms of government.
Adam Koprucki, founder of RealWorldInvestor.com, disagrees with Armstrong's view. He doesn't see a larger global conflict forming and affirms his belief in the stability of the U.S. dollar unless there is severe inflation.
Dr. Tanya M. Evans, an expert in crypto policy and law, echoes Koprucki's sentiments on Bitcoin's potential resilience in times of crisis due to its decentralized nature. She believes cryptocurrencies offer a unique opportunity for financial resilience amidst increasing geopolitical instability.
Finally, Jim Cagnina, market analyst at NinjaTrader, weighs in on Bitcoin vs. gold debate.